everyone, thanks for checking out my channel. I'm going to have a look at natural gas, looking at what happened last week, having a look at the quote reports and see what are the different position of various traders, and having a look at next week and what plan can be set and what we have ahead of us. Having a look at last week, so it was quite an active week. Of course, you've seen some really solid move up on the new contract, up to 214, and then we had that big reversal down now to 182, which is almost the start of the new contract. So back to zero again, and of course disappointing for anybody wishing for that big breakout to happen, and that was a failed attempt. But yes, I think for now it's not completely over. There's still some support underneath, and I'm going to have a look at what could be ahead of us. Looking at the quote report, it was running from the 28th here, which was roughly the start of the contract, up to the peak on the 5th at 215. And we could see that once again the managed money increased significantly in the long position while reducing the short exposure. They are net long now, about 50k, which is noticeable because it's been quite a long time they didn't go positive, so no changes there, which is expected since the move was moving up. So it would be interesting to know what they've done the course of the last 3 days. Certainly we could expect some long closure, but what would be important is to know if they started to load shorts. That would be a concern definitely for the for the trend to move further high. Looking at the big position, we can see that other funds had massively increased shorts during that time in that move, but otherwise it's pretty much it's quite neutral in terms of the producer, and we can see that the swap dealers were still edging against the long moving up, and that the open interest was dropping a little bit but not significantly. So nothing that was actually extremely concerning about that move up. It was expected to close that gap here, which is running from 188, but was meeting with that trend line that we can draw on the daily chart. That's on the continuous chart. And we had that trend line support here that got broken here. There was expected to be some support in the 180, so definitely a concern that this got broken. And looking a little bit closer here, if we take the lower point from the start of the contract to the lower point, so just get that point here to the close, and that we report this. So I've done that last week. So we're currently sitting on the June contract on 166, so technically comparing to 158 we are staying at a higher low. In terms of the reversal, that's quite important. We have set check that, but we have set a new higher high. So set down here, and even dropping that to the end of the previous contract. The point at 2.15 was higher than 194, so high in place. But now we're looking to set higher low, so ideally we should close somewhere above 170 to be confident that we're not breaking the previous 158. Is it possible? I think next week we are going to see some more selling pressure because of the approaching rollover time. As we can see, the Contango is still important with the July contract and quite large still with August. Of course that can change quickly with the spot price moving potentially higher. So we got some news about the weather that will get much colder for May, and also the supply is still shrinking, but doesn't actually show on the inventory on the weekly report. I think the reason is that the demand is still reduced due to lockdowns in various states. So yes, it will be interesting to see what will happen next week between the weather and potentially the supply continuing to shrink. We have record number of rigs pulling off. So yeah, it will have an impact at some point on the production, but as for now, it doesn't translate here. I think that move we had here was definitely some speculation again about the weather, about some issues with the pipeline, and yes, that kind of thing, but nothing really strong enough to break above key resistance. So for next week, I'm expecting some more selling pressure. I think we'll find some more supports, potentially closing the contract gap on 170, and from there we need to have a look at the price action and where we sit. Should we actually go lower here? Still on the daily, we're still having that major divergence in place. So to me, that will not get invalidated that easily. So we can draw the line here, for example. But another drop from 49 down to 43, so that's about 6 points on the RSI, which is equivalent to that kind of move. So yes, I think 170 is a fair target. Should we break lower, there's still a possibility that we could see, because of the weather, some more speculation and returning toward the 196 and potentially a retest of 212. So that scenario I think is still valid. We could still move alongside that trend line on the daily and accumulating against the 2.10. We can see here the 2nd of June would be the end of this, with the 200 DMA running in this area, so will be key resistance to break. But even if should we drop to 170, there's nothing preventing to setting up a new accumulation from a bit lower. And yes, that would be my most not my preferred scenario, because I'm still holding long, but I think potentially the most likely scenario to see that move down, then a move back higher for later on during the course of May, and potentially selling pressure reducing post FND. So yes, that's about it about natural gas. I wish you safe trading, success, and I speak to you soon. Cheers, bye.